To prepare a spreadsheet for our income statement. Our cash flow. So a cash flow worksheet, and then prepare the actual cash flow statement. So we have the following information for 2019 is available for Stewart Company. Sales, cost of goods sold, other expenses, loss on the sale of equipment, gain on the sale of land, and net income. And then from the comparative balance sheets, we have our assets and our liabilities with year-end 2018 balances and year-end 2019 balances. And then we have some additional information. The equipment that was sold for cash had a cost of $400 and a book value of $300. The land that was sold brought a cash price of $530. 50 shares of stock were issued at par. Making whatever additional assumptions are necessary, prepare the spreadsheet to support the 2019 statement of cash flows for Stewart. If an amount is 0, enter 0. And so we have the basic layout for our spreadsheet down below, or our worksheet. And so we can start with just pulling over these balances. So we'll come back up. And I have a space in between them, so I guess I can't just cell reference everything. And then we'll just subtract the 2 to get the difference. And jump down to accounts receivable. And do the same thing. And there's not a space in between these, so we can copy this formula down really quick. We can pull this formula down through equipment. So what we have so far is the 2018 balance, 2019 balance, and the balance change, and we're now going to enter the debit and credit entries that cause or correlate to this balance change. And so for cash, that's just a result of the debit of $430 cash. Accounts receivable, it's a result of a credit of $140. Inventory as a result of a debit of $50. And then when we get into land and equipment, we have to look at it a little bit deeper. And so I'm going to put a T account over here for land. And let me just get top row here. I'm going to copy it so that we can do the same thing for equipment. So for our land, we have a beginning balance of $300, an ending balance of $500. And then we also see that land that was sold brought a cash price of $530. And up here we have a gain on the sale of land of $400. So if we were to reconstruct the journal entry associated with that, we would have a debit to cash for $530, and then a credit to land and a credit to the gain on the sale of $400, which means that we must have credited land for the difference of $130. So down here, we need to pull down that credit of $130, and we can also plug that credit of $130 into our worksheet. And so now, what's the other part of this? What's the debit that got us to $500? Oops, didn't mean to do that. And so we can then just solve backwards and see that we must have purchased land then for $330. And we notice that this debit and credit entry balances to the $200 change. So now for equipment, we'll do something very similar. We had a beginning balance of $1,600, an ending balance of $1,800. And then what else happened? So equipment that was sold for cash had a cost of $400 and a book value of $300. And so if it had a cost of 400, we must be crediting equipment for 400. And so that will be our credit in our worksheet. And then we can solve for the balance, meaning that there must have been a debit of 600. And we can pull that 600 down. And again, the 600 and 400 balance to this 200 change. So now let's pull down our balances for these liabilities and equity. Oops. I guess, oh, sorry. This should be a reference to the depreciation. And then our accounts payable. And we can just really copy down this formula for the, maybe, to calculate the difference. And then we can pull and drag this formula down to retained earnings because it follows down like that. And so our accumulated depreciation, let's do another T account over here. And I'm just going to copy this one before we put the numbers in it because we're going to need one, I think, for retained earnings. So our accumulated depreciation had a beginning balance of 200, an ending balance of 150, and then we also know that when we sold this equipment, it had a cost of 400 and a book value of 300, which means that we can subtract 400 minus 300 to get 100, being what we debited out of accumulated depreciation when we sold that equipment. And so we can pull that debit to our accumulated depreciation, and then we're left with calculating how much we must have credited during the year. And so we can just solve backwards, and we learn that we must have credited accumulated depreciation for 50. Then our accounts payable is a result of a credit of 150. We don't need to enter anything for bonds payable because there's no change. For our common stock par, it's a result of a credit of 500. And then our retained earnings, we'll do another T account. We had a beginning balance of 700. We have an ending balance of 840. And then if we come back up, we also know we had net income of 1,140. And so we have to figure out what the change in terms of dividends must have been so that we can plug that into our debit. We know that that credit is the 1,140 that was our net income. And so we get $1,000 debit, or in other words, our payment of dividends. And, I forgot to do totals here, so let's do that really quickly. Oops. And then we'll do a total here as well. And so we see that at this point, let me put our double bottom. We can see that our assets are balancing with our liabilities and equity at the beginning, the end of the year, and as far as the changes go. So that's a good sign. And then we'll also do a sum of all of our debits and all of our credits and confirm that they balance as well. And so now that we have this, we can start pulling down into the cash flow from operating activities. And so we start with net income, which is that $1,140 that we credited to retained earnings. Add the decrease in accounts receivable. So we'll come up and reference that. Add the loss on our sale of equipment. And that was $260. Now add our depreciation expense, which we have as the credit to our accumulated depreciation for $50. Add the increase in the accounts payable of $150. And then less the increase in inventory of $50 and less our gain on the sale of land which was the $400. Then cash flow from investing activities, the proceeds from the sale of land. We know that it was $530, right here it says that. So proceeds $530. Payment for the purchase of land based on our T account and our worksheet, that would be our $330. The sale of the equipment. If we reconstruct the journal entry that happened when we sold that equipment, it will make it easier. So we know that there was cash, a debit to accumulated depreciation, and in this case we had a loss on the sale of equipment, so we'll have a debit to loss on sale and a credit to the equipment itself. And if we look back at our T accounts, we already figured out that there was the credit to the equipment of $400. The loss on the sale is given to us as $260. Whoa, what in the world did I just do? I'm not sure. The accumulated depreciation we had determined to be $100. And so that means that we can solve for the cash proceeds of $40. So, proceeds from the sale of equipment being $40. The payment for the purchase of equipment, we had already determined in our worksheet $600. And then we move into the cash flows from financing activities. We have the proceeds from the issuance of common stock. Let's see. We have 500 here. And our payment of dividends, we calculated as 1,000 in our retained earnings T account. And so then we can determine the net increase in cash. All of our debits minus some of our credits. And we get a net increase in cash of $430. And then at the bottom, we'll do a total to confirm that our debits equal our credits. and they do. So then the second part of this is to actually prepare the statement of cash flows based on this worksheet that we have just completed. And so now it should be pretty easy to just plug all this information in. So of course we start with our net income for our operating activities, and we can cell reference back up to our 1140, I'm sorry. Then our adjustment for non-cash income items, we'll add the depreciation expense, add our loss on sale of equipment, and then less the gain on sale of land. And so we can just reference back up our depreciation expense being 50, the sale on equipment was the 260. The gain on the sale of land was 400. And then our adjustments for cash flow effects from working capital items, we'll have the decrease in accounts receivable, the increase in inventory, and the increase in accounts payable. And so again, we're just going to reference up our accounts receivable, our increase in inventory, our increase in accounts payable. And so then we can do a sum here. So we get net cash provided by operating activities. Then we'll come down to the investing activities. So we'll have the proceeds from the sale of land, the payment for the purchase of land, the payment for the purchase of equipment, and the proceeds from the sale of equipment. And then again, we're just going to reference back up proceeds from the sale of land, 530. The payment for the purchase of land, 330. The payment for the purchase of equipment, 600. The proceeds from the sale of equipment, sale of equipment, 40. And we'll do a sum function here. Which gives us a negative, so an outflow. So we'll show the net cash used for investing activities. And then finally we come down to the financing activities, where we'll list the proceeds from the issuance of stock, common stock, and the payment of dividends. So we have our 500 from the common stock, the 1,000 from the dividends. So we're going to have net cash used for financing activities. And then our net increase in cash. And so we can say here equals the operating activities plus the investing plus the financing, and that should give us the same 430 that we determined in our worksheet, and it does. And so then we want to pull our cash balance as of January 1st, which was 700, And the 700 plus that 430 should give us our ending cash balance. So we have 1,130, and if we come back up to our worksheet, our ending cash balance was 1,130. And you'll also notice that that change, the 430, is what we determined as our net increase in cash for both the worksheet and the actual statement of cash flows. And I'll just go ahead and add a few lines in here really quickly. We're done with the problem, but just to make it look a little bit nicer. A little easy, a little easier to read. All right, and there we have it.